Hello, hello, hello. Good morning, everyone. We're going to have Bob on in just a few seconds. Good morning, Donald. Good morning, Patrick. Good morning, PMG. Good morning, Jake the Snake. Yeah, these were stagflationary numbers this morning. Good morning, Jacob. All right. Other people in the back. We got a lot of people in the background. Don't be afraid to say hi. Let's just bring on the Bob. The Bob. Good morning, Christoph. Hey, Bob.
Is this bad? This thing back here bad? Lower it.
Oh, fancy. Look
But
at that.
very fancy.
All
Very
right. We
loud.
had GDP numbers. We had the PCE components coming out. Woo.
Yeah. So the GDP is a very okay. So yesterday intraday, I saw the CME Fed Watch show at about 68% of a hike. I pulled it up right after the announcement, and it was 80 some odd percent. Where's it at now, Mike? So what you're doing?
It's at 82%.
Okay, so the hike is back in play. I talked about yesterday on the Ninja Trader thing how the quiet period kind of kind of screws the Fed up a little bit because when you have data like we had with the durable goods and the retail sales, ex autos inventory was up yesterday. So that means retailers are not selling as much. That stuff, the Fed can't comment on it, right? They can't kind of give guidance as to whether that's going to affect their decision or not. And then you see numbers like this. And again, this is the quarter over quarter prices. Tomorrow's PCE is still going to be more important to the Fed. But quarter over quarter, you saw prices rise. This includes a decent amount of energy sell off in it. So it's an interesting metric. And I suspect I haven't looked deep into it. And I don't know that I will because these numbers aren't as important. But there's probably a good deal of services inflation in here, is my guess. But they're big beats. And they're big beats because of the fact that we're expecting them to drop, right? We're expecting inflation to continue to go down. Now, I want to stress that the quarter over quarter price index is the least important in all the inflation numbers we get because it's just big blocks and there's different little things that can happen intra-month that can affect this number. But it matters. Okay, it matters a lot. You also had jobless claims again above 200,000. Last month was revised. I'm sorry, last month. Last week was revised higher. So that's obviously a negative. And then you look at it above 200,000, and I think this is the fifth week in a row now above 200,000. I'm actually checking right now to see if that's right. But I think it's the fifth consecutive week now above 200,000. And that's been sort of a number that people have hung their hat on as being the one, two, three, four. Okay, it's the fourth week in a row. No, I'm wrong. It's fifth. It's fifth week in a row above 200,000. That 200,000 level has been a number not to imply that jobs were getting worse, but it was one of those things like a mild resistance level where everybody's like, we got to get above 200,000 week and weekly jobless claims to even say that jobs are starting to be lost. And here we have it. 5 weeks in a row is now enough to believe that there's a trend in place, in my opinion, in terms of jobless claims. I was actually just on the phone with somebody, uh, sort of a high up director level at a very big bank who his position got eliminated about 8, 12 months ago, somewhere in that range. And he has not been able to find a new job yet. And he said that he was not able to apply for claims because of his severance package. And he suspects, based on the data he's seen, that that's a lot of the reason why jobless claims have lagged, is because when you look at the layoffs have been focused on big tech and they've been focused at middle to upper management. These are the people that would get packages when they left. So when they got laid off. So I would look at that as being a trend toward the recession we're talking about. And now I feel like I have to say we need prices to go down. We need them to go down because stagflation is freaking terrible. It's a terrible position to get in. As these numbers continue to roll in, I feel more and more confident about the recession call. I felt pretty confident about it anyway. We need prices to go down. So, guys, stop spending, is what I'm saying. Please stop spending. We need prices to go lower. So, that's really all I wanted to talk about. Unless any questions from Mike or anybody else.
Uh, let's we let me see here. Good morning, Anissa. Hey, George. Good morning, Option 22. Any thoughts on this morning's futures? These numbers didn't make a dent. Well,
So I would hold off on that options 22 in terms of the numbers not making a dent. Remember what happened yesterday? I mean, it took all day for the NASDAQ to even come close to unchanged because the big names, I forget, the S&P is market cap weighted. Is the NASDAQ equal weighted, Mike, or is it market cap
no, it's
weighted?
market cap.
Okay, so a couple of stocks can pull an entire index higher, same like the S&P. So I would wait. I would wait before you said it. They didn't make a dent. You're right. They didn't immediately make a dent. But remember, 25 basis points was sort of the base case for most people. The market was pricing it in at a lower probability, but the base case for most people was 25 basis points at this next meeting and then a pause. That's still the base case. That hasn't changed. This is just taking those couple of people who thought that the recent figures might give the Fed pause. That's no pun intended. Might make the Fed pause now instead of doing 25 basis points. They're now back on the wagon with the rest of us. So I wouldn't say that just yet. This might be another one of those days. I mean, Meta's earnings were great, and they even guided higher. Eli Lilly missed, but they guided higher. Mike, I don't know if there's other ones that jumped out at you from this morning, but the individual stock story drives the Nasdaq and the S&P, and the individual earnings over the last couple of days have been very strong. So I don't think this is an incorrect response. Options
Bob, how much risk do you see for commercial real estate in a recession environment?
a lot. The only commercial real estate that I like right now, Jake, is warehousing. So commercial properties that are used as warehouses. So a company like GXO. Okay, now I mentioned GXO because I have a base level casual relationship with the head of their investor relations. So I need to throw that out there because that's kind of like that's a disclosure. I know the guy on a semi personal level. His name's Mark Manduca, and he is always pushing his stock. Every time I see him on TV, he pushes his stock. And I'll actually text him. I'll be like, "Are you giving economic information or just pushing your stock?" And he's like, "Hey, dude, I'm doing my job. Leave me alone." But companies like these logistics and warehousing companies would be something involved in commercial real estate that I would like a little bit more than office buildings. So, like a Jones Lang is something I wouldn't really like. Um, Although I don't think JLL stock has been doing terrible. I don't know. But GXO, I would look at more. JLL, I would stay away from personally. Again, not financial advice. I'm not a financial advisor. I don't even know if that's your question. But yeah, there's a tremendous amount of risk in commercial real estate. One of the things we haven't seen in the regional banks, and I'm rambling a little bit, Mikey, so cut me off, whatever. One of the things I haven't seen in the regional banks yet is bad loans, right? I mean, are bad loans being taken out of the picture? Because there's a lot of them. There's a lot of loans that are in trouble right now. Let's see, GXO stock. It's not a bad chart, but it's selling off today pretty hard, or selling off this week pretty hard, I should say. It's down about 6% on the week. And JLL, oh,
Oh,
JLL is awful. That is an awful chart. Wow.
interesting. What else do we have? Uh, Pep wants to know how these numbers will affect gold.
Well, these numbers, they're hurting gold they should be. I haven't looked at it. Is gold down? I assume it's down a lot.
It's not down
Um,
that much. It's down
okay,
14
13
basis
basis
points.
points.
Not much.
Yeah. You guys all know what we're talking about when we say basis points, by the way. It's something every trader should understand. And I guess it's an easier way than saying between 1/10 and 2/10 of a percent. It's is saying 14 basis points. 100 basis points is 1%. Everybody should know that. So 10 basis points is a tenth of a percent. 50 basis points is a half a percent. If you've been watching the Fed, you should know that. But if you don't, I always like to talk about that. Anyway, gold should be negative on these. And that's because yields are popping. I don't know how high they popped, but I'm looking right now at the updated yield curve here. Let me actually refresh this page. And I'm seeing the 10-year at 349 And yesterday, the 10-year settled at 343. So yields are going higher. Gold has an inverse relationship with yields. So whenever you see yields go up, that should be a headwind for gold. Unless, no, that'd be the same situation. So never mind what I was about to say.
What do you make of the NASDAQ sell-off in the afternoon lately?
I think Mike knows what I'm going to say here. I mean, the economic backdrop is what it is. Okay. Again, individual stocks, because the NASDAQ, as Mike confirmed for me this morning, is market cap weighted and the S&P is market cap weighted. When an individual stock that's a large portion of the index rallies, it's going to pull the index up. The late day sell-off is one of those situations where the economic situation is what it is. Okay. It is what it is. We are likely going into a recession. And we have a yield curve inversion that is steepening a little bit lately. Okay, if you look at the settlement 2 days ago, actually settlement yesterday too, I'll look at the 2s, 10s, Mike, if you want to look at the 3-month 10-year or whatever it is you looked at yesterday. We had a 47 settlement yesterday. We had a 46 settlement on the 25th. Okay, the highest, or I should say the lowest settlement was negative 107 on March 8th. All right, so we've had that thing almost steepened by a third, 2/3 almost. So that's when stocks get weak going into a recession, right? Is when the inversion, this is based on Mike's research, which I know how thorough he does his research. He's been a pain in my ass for 15 years. Mike's research tells you that the yield curve tends to re-steepen to positive prior to stocks bottoming. Okay, that's because the market doesn't believe there's a recession coming just yet. And yesterday's sell-off showed me that the market is starting to maybe believe it a little bit. Maybe just a little bit. So that's what I make of yesterday's NASDAQ sell-off. I suspect that will happen today, but I wouldn't advise anybody trade that suspicion because it may not. We got above some small resistance with this pop right here, so we'll see.
The 3-month 10 years at minus 155 basis points.
You don't know what the low was, right?
The low today?
No, the low, period.
I think it was close between the Friday the 14th and today, but I'll just go off Friday the 14th. It was minus 164.9, minus 165.
All right, so that one is not doing that much better yet.
No. Nope.
So that's a big number, Jake. It's a very big number. 2 trillion in held to maturity securities. By the way, the held to maturity securities. So banks have two sets of securities, right? The always for sale and the held to maturity. So the AFS and the HTM portfolios. The always for sale are the things that they will sell when you want your money. The held to maturity are things they cannot sell. Okay, they can't reclassify them. They're stuck with them. That's why when there's a run on a bank that has a big number of held to maturity securities, they're stuck. They don't have the money and they fail. That's what happened to SVB. It's what happened to Signature. So that many in held to maturity, those are the assets that the Fed is taking as collateral for these loans that they have to pay 5% on. So here's the fallout from yesterday's announcement or discussion. It wasn't really an announcement that the Fed was starting to look at First Republic and possibly not allow them to borrow more. That means the Fed doesn't think they'll get paid back. Now, the Fed has access to all of the books of all the banks. Okay, they can demand to see all their assets and liabilities at any time. And the fact that they're saying we may not lend them any more capital is a problem for that bank. They didn't say they wouldn't. They said we might not. So we'll see.
All right. Well,
I know we're doom and gloom, but we need prices to go down now. So stop buying stuff, everybody, except gold. Keep buying gold. Full disclosure,
there, Bob.
I'm long gold.
All right. Well, thank you for jumping on.
Yeah. Again, about a 90% chance, Mike, that I'll be on this afternoon, but I'll
Okay.
text you if I can't. And I'll come on tomorrow morning after PCE as well.
Yeah, PCE numbers are going to be big tomorrow, although they'd have to be really dovish for the Fed to not do 25.
Yeah. Agreed.
So, all right. Thank you.
All right. Talk to you guys later.
Okay, everybody, just some quick. We'll have to you'll ask him again this afternoon. By the way, daily cycles are at the bottom. And one that I've got to stress one thing. And the weekly cycles, remember, this is multi-week, are still up at the top and rolling over. So that's a multi-week trend. Daily cycles, we could see a pop, but it's not always a strong pop. It could have up to sideways. Remember, we've sold off. Corrections can happen sideways. Yesterday we hit a key level, the 50 EMA, and we, over the last 2 days, we broke below major support. So now that major support's resistance. Again, ask questions. There's a delay, so Bob goes off, and then the questions come in. So make sure you save your questions. So especially, I mean, we've dropped a fair amount. Would not be surprised to see a sideways to slightly choppy up market with daily cycles at the bottom before the next rollover play. So we'll have to see how that plays out. The major resistance, the major key area I'm watching is a 41.14. Based off, we also have, where is it there? Let's see. We still have the gamma flip at 41.27. And that would take us back. Remember, negative gamma can amplify the moves up and down. It doesn't shift into positive gamma until 41.27. So 41.14, 41.27, 41.41 are key upside numbers. Support 40.83, and then yesterday's low area. Not only do we have the harmonic, we have, remember, the 50 EMA. We take out that. I'm just going to, we don't have a super long pausing area yet, but if this did roll over, look at this. Look at the harmonics. We got 40.52, which is the prior major breakout level, and then the minor breakout level is 40.37, reinforced now by the harmonics. But on any sell-off, I'll be really focused on yesterday's low. Okay? So that's what I am looking for. The NASDAQ, which again, from this high to here, we still have 13,190 is the official invalidation level for the triggered double top. Now I'm looking at this level for any rally, 13,074 and then 13,143 are the next key levels higher. So we got daily cycles at the bottom already turning up about halfway, and weeklies we can have a multi-week rollover still. So intraday, besides those, 13,100 is another key level. And then on a sell-off, right around 12,900 to 12,916, and then 12,860 area are the key levels. The Dow is got price rejection for this 33,600. Yesterday off, we closed at the 50 EMA. Yesterday's lows are key on any sell-off. And then below that, we still have about 33,275. Russell, look, any rally just takes us back to a key breakdown zone off of key support. 1761 is resistance, major support 1732, which was right around the low today and yesterday. That breaks 1718 and 1703. The VIX is back in this lower range again. We'll see. I mean, there's not a lot of great data here for the VIX one day. We're getting that carved out. The DAX, Still holding with the rotation zone. But watching, this is now chipping away a little. We'll be watching for a rollover pattern more substantially. The notes, we broke below yesterday's lows, so that from a trailing perspective is done from the percent B buying. We're still in a major consolidation pattern, so nothing from my perspective with that. Dollar index, little bounce back today, but still in a multi-day consolidation after yesterday's lows put it in double bottom territory, but again, not triggered or confirmed. So that's the major thing I'm watching there. Crude, holding against the 50% level. Watching for some kind, see if we get a bottoming pattern. There's just very small mini double. It's still valid, so that's the only thing I'm looking at there. What else? We already looked at gold. Again, the little minor intraday support's about 1981. The next key support level is 1965. Yen, we trying to rotate back up after holding the key support level, but not major play there. The euro still has a potential double top. The pound has nothing. The Bitcoin is still in a major consolidation area. Tesla looks like a slight gap down, so it'd be from yesterday's close, but then key resistance is coming in about 159.70 to 160, and then 166. Next level support I'm watching for is the 145.28 to 144.43. The spiders and the Qs at this point flip around the retracement harmonics. 406.87 is trading right about the 25% retracement at 406.95. Above that, this is where, then that's some pretty key resistance, but above that I'd use 408.26 and a major area 409.75. On a sell-off, it's really 405.27 and then yesterday's lows, 403.78. Below there, your next major level is to the gap fill at 401.35. There isn't a lot of support into this clear path, but there's some minor. You can watch minor at the 402.57. On the Qs, on a rollover, 315 is going to be the key support, and then yesterday's open. Well, sorry about that. Then 314.25, and then yesterday's open 313.44, and then yesterday's close at 311.87. Those are the levels to the upside. Any rally, 315.85, then 316.50 area. And of course, you can do your harmonics from the sell-off to the retracement harmonics. They're virtually going to be the same at those levels. So you're again, look at where your harmonic at that breakdown level is. That's the 50%. And then above there, your major level to watch is 317.23. All right. So that's where we sit with everything. Let's just peek back at the S&P. Again, going into the open, this 4,100 is going to be key. If we do sustain any momentum above there, it's 4,115 is the next key level. If we do break below about 40.90, just take a look at the shorter term. The pivot is right around this 40.93 area. But key is if we don't make a new push up into the open, I'd really be paying attention to I'd go with about 40.92, then watch for support about 40.87, and key would be 40.82 on a closing basis for intraday stuff for a breakdown play. All right, with that, I will be back after the close. Thank you for tuning in. Everyone have a wonderful trading day. Bye for now.